You've probably heard, the stock market is up, or Dow Jones fell 500 points. But what does that actually mean? Today, I'll break down how the stock market really works, simply no jargon, and by the end, you'll finally get what's going on when people say they're investing in stocks. The stock market is not one big building. It's a collection of markets like the New York Stock Exchange and NASDAQ, where people buy and sell small pieces of companies called shares or stocks. When you buy a stock, you're literally buying a tiny piece of a company like Apple, Amazon, or Tesla. Let's say you start a company and want to grow fast, hire people, build factories, launch products. Instead of borrowing money, you can raise it by selling shares to the public. That's called an IPO, initial public offering. People buy your shares, your company gets cash, and investors hope the share price goes up. There are two main ways to make money in the stock market. Capital gains, buying a stock low, selling it high. Dividends, companies share part of their profits with shareholders. But remember, prices go up and down daily depending on supply and demand, news, and investor emotions. No one person or company sets the price. It's based on what people are willing to pay. If more people want to buy than sell, the price rises. If more want to sell, it falls. That's why big news like interest rate changes from a Federal Reserve can move the entire market. The U.S. stock market affects almost everything. Retirement plans, jobs, even how much confidence people have in the economy. That's why you'll hear about it every day on news. It's not just for rich people, it's connected to everyone. So now, the stock market isn't magic, it's a place where millions of people buy and sell ownership in real companies. If you want me to explain how to actually start investing safely as a beginner in the US, hit that subscribe button. We'll cover that in the next video.